discuss the county health insurance. Mr. Wilson, he wants to get out of here, he said. In more than 30 minutes.
Yeah.
Here.
Yeah, blue, that blue?
Yeah.
Thank you.
When you house specs and all that sort of stuff.
17. 2 weeks.
17 for the June.
Yeah, 2 weeks.
Good deal.
Yeah.
And we need more than on. I mean, that's a pretty good check for 2 to switch to go on.
Yeah, we got the county to look.
3 pages to a set.
Did you meet anything else? Okay, thank you.
Thanks, Rick.
I'll be back.
Yeah, I make a motion to approve all invoices before we go.
Second, something. All in favor, say aye.
Aye.
All righty. Rita, you want to talk some about our advantages of our self-funding insurance program that we looking to endeavor upon?
Okay. I'm sorry, y'all. I had strep throat, so my throat's sore. But, and looking at our insurance from last year to this year, and it's gotten down to the wire, and I hate that, but, I'd had asked for some information a couple of months ago that just got to me like 3 weeks ago for some, we needed some claims information just to put it out there. But when I finally got it, we submitted it to a couple of different, carriers so that we could get the best options possible. Our current carrier is Blue Cross Blue Shield with MSI, the broker out of Kennesaw. And the current, rate that we have is a total of, our current fully insured, that we're talking fully insured, is a total per year of $1,847,624. Our renewal rate with Blue Cross Blue Shield would go into $2,032,386. I asked that they look into some partially self-insured options, and they came back with, Aetna and Blue Cross Blue Shield and Cigna. And Cigna ended up being the, option that was the cheapest with a partially self-insured, program. your pages there, we've got Blue Cross Blue Shield. It's probably if you wanna look at your third, let's see, let me look, I forgot what page that's on. Oh, well, looks like it's the second page of of what I gave you out. It's MSI, Earl, this is it, Bill, you got it,
I got
it's
it.
the second page. But the Blue Cross Blue Shield, if you look down at your annual fixed cost, it was, Blue Cross, it was $579, Aetna $443, Cigna Direct $439, Benefit Support Cigna $528. And if you flip the page over 2 pages over, you'll see the MSI cost. It's one more page over. Fixed cost was $393,000 annual fixed cost. And the very front page is the Paragon, and their annual fixed cost was $359,000. And what they do is they take their annual fixed cost and they add it to what your expected claim is going to be and what your maximum claim could possibly be. And those numbers are just like us doing a budget. They can manipulate those numbers up or down to make it whatever they want it really to make it. But Paragon looks like they've got some really good numbers because I asked for a claims history to date, and our claims history to date from like May of last year to April of this year is $1.7 million, and they're the ones that are closest to the mark on our maximum claim liability, and their expected claim liability could be even less than that next year. So when you look at the bottom line, the total amount that we would pay out is a little over $2 million, which would be $2,069,000. If we were to have everybody pretty much going to the hospital and making claims. In my opinion, and it's just my opinion, I looked at the annual fixed costs because that's what we know we're gonna have to pay out each year. Everything else is a variable. You don't know that until you're in the situation. It could be more, it could be less. So I didn't really look at those numbers to decide whether we should go with one company or another, and it's not my choice anyway. So I was just gonna let you guys know what's out there and what you can look at. And if you've got any questions, I've been schooled very thoroughly, I think, in insurance over the past couple of weeks. The policy that, just so everybody knows, switching from Blue Cross from Blue Cross Blue Shield to Cigna will not change our policy whatsoever. Our premiums are not going up by going this route. Premiums will not go up. Our coverage is the same. All of the employees will have the exact same coverage. Everything stays the same. We just have the potential to save quite a bit of money by doing it this way.
Will family stay the same as well?
Yes, yes. Everything will stay the same or possibly get better, depending on, yeah. My goal is by suggesting that we do the self-funded is to possibly, might not happen this year, but if we can, instead of having right now we're in the ACCG pool, if you look at it this way, if we're in an ACCG pool where Fannin County relies on several other counties to have good claims year, just like they rely on Fannin County to have a good claims year. And if somebody else doesn't, then that directly affects our premiums. Just like we had this year, Fannin County had a drop in our claims. We only spent out $1.3 million in claims, but we paid the insurance company $1.78 million and in premiums, and closer to $1.8 million. So if you look at it that way, we could have potentially saved over $400,000 by being self-funded. But because we're in that pool with the other counties, our premiums were going up over almost $200,000. Yeah, $200,000 a year. So instead of us being rewarded for our claims going down, we were getting punished because everybody else is really going up. So my thoughts is that we become our own pool. We have 190-something to 200 employees on insurance, and we can be our own pool. You know, everybody else, if we can educate everybody on the insurance and how it works, this money, instead of going to Blue Cross Blue Shield in a premium amount, it's going into our checking account that's set up specifically for this, that says, okay, here's our money, which is Fannin County money, and a portion of our employees' paychecks are going into this county fund that's going to pay everybody's insurance. And if I use it wisely and everybody else uses it wisely, then hopefully next year our premiums will decrease instead of increase.
What about prescriptions? How does it
This
work?
is all covered, same thing.
Same
Yes,
thing.
yeah, the numbers that this is encompassing is your prescriptions, everything.
Okay. I understand Union County is went to this as well.
They've been on it for years and they
Oh,
love
really?
it. They love it.
Okay.
They've got their employee premiums down to barely nothing. I mean, they really have gotten their, over the years, they've been able to do quite a bit up there. Now, Gilmer County was on it and they just tanked, but you gotta have somebody that's helping you, knowing what they're doing, and you got to keep a good watch over it.
And that's gonna be Mr. Painter's role.
He and
Yeah,
his
Paragon.
part, in Paragon, yes, that would be the TPA, the third-party administrator. So Kevin and the Paragon are partnering with this, and just like I said before, you know, if we have an employee that has a problem, they can drive right over to Kevin Painter's office and sit down in his office and talk to him about it.
Because
He's local.
that's exactly what I'm thinking is, you know, with the potential savings that we could save, the only way to make that, become a reality is have somebody that's full-time looking at this
Mm-hmm.
and educating everyone.
Educating
To spend the
everybody.
insurance dollars wisely instead of.
We could get, I mean, well, we all know
Well,
Kevin
there's
Painter.
more
We
about
could
it.
make him come in here once a month and say, okay, why, you know, what's going on? Here's some things that we need to do a little bit better and keep a handle on what our claims are. And, you know, if we see a big claim come in and it's somebody that's gone to an emergency room and been admitted or this, or that, you know, we can kind of see where things are moving and progressing in that direction and see what we need to do in order to prepare for it if it's something that can't be helped. But if it's just somebody going to the doctor or the emergency room over a weekend and they really didn't need to, and say, hey, you know what, did you know you had this option that you could call this doctor and you didn't have to go to the emergency room over the weekend? You could have gone and called the doctor and they could have, you know, called you in a prescription if it was a, you know, a headache or a, you know, something like that, or strep throat like I have.
Well, that's another thing I was gonna ask you, Rita, is the doctor of your choice, or is the doctor under their plan?
It's just like the Blue Cross Blue Shield.
The same
Yeah,
thing.
same thing. And
Okay.
the same doctors are on the Cigna.
Okay.
I think there might be one or two that are not, but I don't think, I don't think that it's a big enough difference that it's,
Little bit.
big, yeah, right.
Right.
But everybody, just a quick poll of what I saw, everybody's like Family Doctor and the major doctors are on Cigna that are on Blue Cross Blue Shield.
So if we stay where we were at, no matter what, we're gonna spend what MSI projected was $2,032,386. That's what it's gonna cost us.
That's what it's gonna
That's
cost.
what it's gonna cost
The
us.
partial self-insured, that number, if everyone is sick and everyone uses it to its fullest potential, the most it will cost us is $2,069,000.
Yes, yes.
But,
And maybe not that. That was, they did it on the high side.
right,
Yes.
And that's based on everybody.
And that's based on everybody.
You know,
Yes,
that's-
we have a specific stop loss and we have an aggregate stop loss. So, the specific stop loss is if somebody hits $100,000, then Cigna kicks in and they start paying the rest of it. And and then we got an aggregate stop loss, so there's a blanket. If we hit this 2 million mark, then they're gonna start picking up immediately, no matter what it is.
best option to go with this, so. After this has been explained to me, I feel like we've been kind of held hostage for.
So as of right now, we stand to save if it's dealt with responsibly, close to $300,000.
Easy.
But if all goes wrong, the most it can cost us,
Yes.
and that $100,000 per employee, correct?
Yes, yes. Yeah, but it would not ever go over that $2 million mark, 'cause that's where the
That's what
aggregate
I'm
stuff
saying.
was.
I'm just looking at worst case scenario.
Right.
Uh, And with the savings next year, hopefully be able to use that money to buy down and lower the premiums. So
What I'm
we
hoping
could
for.
give those savings directly back to employees.
We could either, we could work that several different ways, possibly. We just have to talk to the employees. I'm all about talking to the employees and seeing what they would prefer. You know, that savings, maybe instead of lowering their premiums, maybe lower the deductible. You know, because right now, there's a couple of them are at $3,500 and $2,500. It might be something where they would prefer that the deductible be lowered. I would take employee input on that, I would think, so.
But this
But this is
way, if
potential of
this is what
saving,
we
yeah.
decide to go with, it's gonna be its own account, you know.
On account, we will set up an account, at a bank. We just go to a bank, set the account up, and instead of us paying those premiums to Blue Cross Blue Shield, we would send that money straight over to our account. And then as if you go to the doctor, you're still gonna have your same, you know, card. You're gonna have, you know, you'll have a card just like you do with Blue Cross Blue Shield. But the third-party administrator will be capturing those costs from and calculating, making sure that the doctors are not overcharging, and making sure that, you know, it's just the same thing that Blue Cross Blue Shield does, except now it's going to be through a third-party administrator that will do all of these things. And then at the end of the month or the beginning of the next month, they'll send me an email and they'll say, we need your approval for these costs to be drafted out of your self-funding account, and that would be that. Which will also give us a better handle on what claims are actually being paid each month, because now we have no idea. They just get paid and we have no idea.
But that would be the other insurance companies' staff doing that.
Yes, yes, that would be.
Because I see the
right.
greatness of the potential savings, I'm just making sure that, because it would take someone a full-time job to manage all
Oh,
of it.
yeah, see, that's another thing that Kevin's talking about. He said, I'm probably gonna have to have a part-time person just to administer this. If that was, you know, if y'all.
Because if it's not close attention paid to it, it can be
Right.
abused as well.
Right, exactly. And this way, we're gonna have like 2 or 3 different capture points too, is that, you know, if we go through the third-party administrator and Kevin, then it comes to me for final approval to be drafted out of our account. And then that would be another thing too, is that when it is drafted out of the account, that would be one more thing, like an invoice that I would put before y'all, wouldn't necessarily be something that y'all would approve or whatever. It would be just so that you could see what's going on, so that way if you did have a question, not all you had to do is say, read out, you know, what's going on here.
Okay, Blue Cross and Blue Shield is paid up to the end of the month, right?
Right.
And
And we're paid up through June with Blue Cross Blue Shield.
so that's when you pay your
First of July.
Yeah, for the 1st of July.
Yeah.
And then because that would be your July premium that's being paid. So anybody that went to the doctor in July, once we switch over to this, then it would start coming out. But if you go to the doctor in July, those premiums don't get paid, or those costs don't get paid until August, yeah. They don't get paid till August, so you're always operating on
And that time you'd have 2 payments in.
And then by that time, you got 2
$300-something
payments,
thousand.
exactly.
based on the rates we've been paying and the heartache we went through as of last year with all the rate increases. And me personally, I don't see a problem with try to administer this. If all the coverage is the same, and everyone can still use the same doctors, and prescription is the same, I don't see why we wouldn't try to do this, to try and capture these savings. And more importantly, if we do vote to go locally with Painter, and he's going to pay the personnel to manage all this, I mean, I don't see how we could really go wrong.
The only amount of savings that we can incur on this thing is just, I mean, based on, like you said, you go over to another year and then you maybe drop a
Yeah.
lot of stuff down.
A lot of people have been, I've been looking at this ever since our last year fiasco of all of the increase and everything. I've been looking into this self-funded, and I actually put I think it's in there, it's just a little handout about the advantages and myths of self-funding. So, just later on, so you can read and see why I really started getting excited about this, because used to it would be that companies that were just really large conglomerates would go to this, and they would technically fully self-funded. We're just partially self-funded. That's talking about the advantages of self-funding in corporate America, where, we're not being partially self-funded and self-funded. You don't have to, you're not obligated to all of the health care, the act that Mr. Obama put in place for us, that kind of stuff, all of the regulations that he has. But, we do have to follow some of those guidelines, but it spells it out for you in that handout that I gave you of the advantages, true advantages, even for companies that have it as low as 25 employees.
Union County's got a whole lot less employees than we have, they're making it work, aren't they?
They love it. I've talked to Robin several times over there, and she said, Rita, I just can't say enough good things about it. She said, we'd never do anything any differently now.
This local, I don't think we need to go this route, see if we can't save some money for the county as well as our employees as well. So I'm in.
And if anything goes wrong, we'll just hold Mr. Painter.
We'll go to Kevin Painter's office.
You know where it is.
We got 200 employees we can send up there.
Exactly.
Now,
One time.
Can I ask a question about it?
Yes.
Like on Blue Shield, Blue Cross, when you go to the doctor to get something approved, they've got to call somebody to get it approved. Is this gonna be the same way?
On all of these things, what I've been told is that you won't see any difference in what you're doing from Blue Cross Blue Shield to this. It's just that we will be paying the bills. So, yes.
Okay, so will they be calling Kevin Painter's office to get it approved, or will they be calling Cigna, or who are they gonna call?
They would be calling Cigna.
Okay.
It would have to be an approved procedure through the Cigna network. And I'll get all of that, and we plan on having a full out, Kevin would like to have a full out, if it's Kevin, and, then meet with all of the employees to give them everything that they need to know about the Cigna network and what you would have to do and those types of things. But from what I've read and what I've been told, it's just as seamless from one to the other. Although we're self-funded, the only difference that it's gonna be is up to that $100,000, we're paying the bill. It still goes through the Cigna, and it'll go through Kevin Painter, it'll go through the network, but until that time that $100,000 point is met, we pay the bill on that one employee for the year. Now, if some catastrophe or catastrophic event happens and you're in the hospital and it's more than that, then we pay up to that, and then they pick up, Cigna
we go through this year and we don't use all the money that's in that account, does it roll over to next year?
Yes, it rolls over,
I
that's
mean,
what we were
nobody's
talking
sick,
about,
nobody-
if we end up, just like last year, we paid our total payout was $1,362,000. The premiums we paid was $1,780,000. Had we have been on a self-funded program at that point, we'd have had $400,000 to the good that we could have said, okay, great, let's use $200,000 of that to benefit our employees, lower our premiums or lower our deductibles or whatever, but let's keep a little nest egg here in case something happens that we need that, you know, to go towards something else or go towards that, you know, $2 million mark of our aggregate that we might need later on. You know, if that happens, but that would be up to the
Because
board.
it's gonna be up and down, there's gonna be years more
Yeah.
people are sick, more people are healthy than
Like a
that.
young-
Right, and that's what it's for, is if you save in one year, you know, of course we wanna give I would think we would want to benefit the employees, because they're the ones that held down, and, you know, they were being very, watchful over what they're doing. We all would want to help each other in that, cause we're all in the pool together now, instead of Fannin County being in the pool with, you know, all these other counties. So we're all kind of watching each other's back, and so it should go, I think, to benefit the employees at the end of the year, but also that, to keep that little nest egg to build up in case our next year's not so good.
Yeah, I know, it's kind of like, you know, paying the family plan. When you pay the family plan, man, at the end of the year, you pay a chunk of money
Chunk
out.
of money.
But when you go to the doctor, or say a specialist or something, you've got a big bill there to pay also. You know,
Right.
it's like you double whammy. you know.
Right, my goal is, and I think the Board of Commissioners is what we're looking at here, is trying to get it to where we can, pull all of that into a better perspective to where we all have one plan, whether it's not the three plans that we've had in the past, we can get back to one plan with a low deductible, with low premium, so that our family can afford it.
Yeah. It's hard.
And and this is just the beginning point, so we're not gonna see an immediate savings for anybody right now. We're just trying to get it started so that when we get to going in that direction, we can possibly do that. This is the only way to do it. And I mean, this is the only option we have to do that. That's the only way we can start moving in that direction. We don't have any other option, because Blue Cross Blue Shield came back at us and said, hey, well, all these other counties, y'all had a good year, but these other counties didn't, so your premium's going up $200,000.
Okay, that has to be passed on to the people like yourself.
That would be, from what I figured, if we stuck with Blue Cross Blue Shield, that would cost our employees another $1,000 a year. We don't wanna do that.
No,
So if we don't try this partially self-funded, in other words, everybody's premiums are going up.
If we stick with Blue Cross Blue Shield, you know, now that we might could go with another company, like Cigna would probably offer us something that's a fully funded, but we're still gonna be in that
It's gonna be
same
the
mode.
same price.
That it's we're still gonna be in the same price where, okay, if they did give us the same price as what we're doing now and fully fund the insurance, well, in another year, you know, I'm just saying, I think it might be worth the chance to save money.
Well, it sounds like a
to
good
start
idea.
Passing it on, than to just say, well, let's just totally be on the safe side, and it's okay if we give our insurance companies an extra $200,000 or $300,000.
It looks like a big healthcare savings again.
Yep, it is.
But if worst case scenario, it's not a fully self-funded deal to where the county don't have
Right.
money in the account, they
Right,
can't pay
yeah.
your claim.
There are companies
We're
out
still
there
paying
that
a
do
premium.
fully, yeah,
We're still paying a premium
Right,
to where we're buying coverage.
right.
yes.
So it's not a fully funded, you know, I think that was some of people's worries is, if it's a self-funded deal, everybody's thinking, well, if the money's not there, what am I gonna do? We're still paying a premium, just not as much of one.
Just put it into the, yeah. I
You got
understand.
it.
That sounds like a good idea.
Everybody's got skin in the game, so I feel like that it would be a great idea. Usually if you've got skin in the game, you're gonna take better care of it than if you don't.
Yeah, right, everybody can see.
Or I hope.
Well,
That's my
everybody
hope.
can see, and that's another thing too, is that anybody, any of our employees can ask me any day of the week, how much money is in that account? And I can tell them, because that's your money and the county money. And, you know, it's your premiums being paid in, and it's my premiums being paid in, and it's sitting over there in United Community Bank or BB&T or CNS or wherever we decide that needs to go. It's gonna be sitting in that account, and you can come in and say, Rita, how much money is in that account, you know, this week?
I got one more question, then I'll be quiet. You said that the bills would be sent in, and they would look at it, make sure they was lined up with other doctors and so forth. What if one comes in and it's not, and they protest
They
it?
fight it, they protest it, and they fight
Okay,
it.
but it doesn't hurt our insurance as far as, okay.
No, I mean, I had that question.
I'd like to be able to go back to the doctor if we need to, you know?
Yeah, exactly, yeah, they protest it, they deal
How
with
many
it.
accounts do we have with United? We have several. don't we?
Oh, yeah, we have,
Why
all of our.
don't we do another bank with this account?
That,
BB&T or CNS?
and this is something we can bid this out just like we do anything else. I call the banks and say, we're fixing to open up a pretty large account with you guys.
Yeah.
How much, what can you give us on it? We can collect, you know, interest on this
Well, that'd
as
be good.
well.
That'd be
So what
great.
kind of interest rate can you give me on this? I can bid that out to the banks.
Be great.
So who's gonna be over administering all this with Kevin? That, are you the lucky one? Who's doing
Say
it?
it will be a mutual, I would think.
Well,
We're getting
I
thin.
just want you to listen.
Who's gonna try to explain this to the guys at the barn?
Kevin
That's gonna be
Painter.
Kevin Painter.
Good deal.
So y'all are going with Kevin?
No, well, I'm just saying.
I'm just saying if it's Kevin,
If
it's gonna be
Kevin,
Kevin
it's gonna
Painter,
be
cause
Kevin. If not, it
MSI
would
would
be
be Matt
Matt.
Goodwill.
Matt, we'd have to depend on Matt. I
That's
mean,
right.
he did come last year.
He does
and
come.
That's right, he did, didn't he?
Yeah, he did it last year.
Yeah, I'd come too.
Okay?
It's funny how that bidding process gets our rates on that.
I'll have to,
Or-
you know,
or
right
just
now,
someone else he's looking at.
if y'all would care to come to my office today and have about an hour to spend, I'll tell you what all I've spent, where I started and where we ended up.
Well, I'm sure. Well, that being said, I think we should go with seven, partially.
Partially self-funded.
Self-funded, yeah. So I make a motion we do so.
And then now you gotta decide which one you wanna go with, Matt or Kevin.
Kevin?
That's what we've been talking about all night, really.
Well, you know what, they both have been out there though, so.
Well,
Let's go go local, that way we can turn them on to Mr. Painter whenever.
Yeah, because the thing that just baffles me is we didn't get the best price in the beginning for someone we've done business with for quite a long while.
Exactly.
And I'm glad to be able to keep it local. It seems to me that, we've been able to keep it local and save more money, so, I mean, in my opinion, that would be the only way to go. And I hope everything that's been presented to us is exactly how it is, and as long as that be so, I would, be in favor of it as well, so.
have a motion second. All in favor, say aye.
Right?
Okay,
Fine.
that it? Anything else? Talk about it anymore?
The our next meeting is
June 14th.
not,
Not this
We-
Tuesday, but the next.
quick on invoices. That's all I have. I just hope that everything works out good with this insurance policy. Those
I
types
do
of
too. I
things.
think at first it's gonna be a little bit of rocky road, but I think it's smooth out. Cause you gotta get some money in that thing.
Well,
Get wrong.
everything's a little bumpy to begin with, especially when you switch something around, but.
Well, actually, it was very bumpy for everyone, because everyone's premium. I mean, that wasn't bumpy, that was just knocking the jaws off.
Yeah, this is not, there's no insurance premium change, no premiums going up. We are going to be, seeing nothing like that. So that is a very positive thing in my opinion. it out and get something that's a little bit cheaper, they might see a savings, and we can, have them call you and thank you for it.
Well, if it's been said here tonight, if the guy's got feel they got a stake in it, maybe
Yeah.
instead of going to emergency room tonight with a headache or something, they go in the morning.
Well, it.
Just like Earl said, they got,
Next day.
meeting game, yeah,
Yeah, and,
much to do.
and it will, you know, there's some really, really good options out there that we can sit down and talk to these employees about it, and they understand and realize that, hey, this big fat check that we cut every week is going over here to a bank, and at the end of the month, you know, if I go to the doctor, you go to the doctor, anybody goes to the doctor, that money is coming out of that account. And at the end of the year, if we have no money in that account, then we don't get to save any money, and we don't get to pass that on. I mean, that would reflect on my decisions about when and how I use my insurance. You know, right now, we're paying it out, and, you know, it's there, and it's just there, so.
When you ask the banks, to bid on this, don't share the information with either bank, because just, you know, let's get them to check it out.
Oh, yeah, well, I'll do a bidding process,
Yeah.
just like I would anybody
Okay,
else,
good.
to a bank, and just say, we're looking to open a new account.
Good.
That's gonna house our self-funded insurance, and we need to know what kind of rates you can give us, and that would be that.
1%. I know that you get.
With that bank.
Anything else on insurance?
No, health insurance.
Well, I guess, item number 3 is commissioner's commentary, and basically what we got to talk about, we researched Medora Road, about a quarter of a mile of Lebanon, I think. And, paved, is that Crusher Mine Road?
Number 20,
Crusher number, okay.
number 20 Mine Road, you've, resurfaced it,
So we,
mile of that.
pay that. And we got the greenhouse is ready just about, in a couple of days, they ought to be ready to put some down on it. And then we still have the Skeena Gap and also the, Ridgeway and Hidden Valley. That's another 2 on the list, so. And we talked last time, we're starting now to, on the next 4, 5, 6 roads to get the right of ways and, E&S drawings, get them down to EPD. And that's all I've got.
No, I don't have anything now.
I think we need an executive session though. So I'll make a motion, we go into executive session.
A second.
All in favor, say aye.
Aye.
Reason?
Aye.
Reason?
Personnel.
Personnel issue. I make a motion, come out of executive session and go back into a regular session.
Second motion.
All in favor, say aye.
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 Discuss personnel